Alrighty, folks. So we have a couple companies to break down right now. They just reported earnings. Let's dive into it. Starting off with Shopify, which their stock ended up closing at $53.39. It shot initially to about $57.50, and now it's under $50 a share. So talk about volatility. It looks like the stock closed up 6.5% on the day. Then initially after the earnings came out, it shot up another 8%, and now it's down about from that post-market high. Rather, it is down 14%. Talk about volatility. So let's look at these earnings, guys. Let's break everything down. If you guys find value, of course, hit that like button, subscribe, and don't forget to get up to 15 stocks from Moomoo, each up to $2,000, and up to 12 stocks from Webull with any amount deposited. All of those are linked right down below. I appreciate all of you guys, as always, for using those links, as it does help out the channel. And of course, you get some free stocks. It's a win-win situation. So let's take a look at what's going on here with Shopify, which just reported earnings about an hour ago. They did EPS of 7 cents versus the -1 cent estimate, so they beat on that, and it looks like they beat on sales as well. 1.73 versus 1.65 billion. That's pretty good. And they see Q1 revenue growth in the high teen percentages, which that could be anywhere from 16, 17, 18, 19, right, percent. And they see gross margin slightly higher than Q4. That's pretty good. And if we look here, gross merchandise value increased 13% to 61 billion versus the analyst estimate of 59 billion. So that's a good sign. And let's see, did they says here they guided for Q1 revenue growth. I'm not seeing anything on EPS guidance, but it is it's selling off. And here it says forecast disappoints amid escalating Amazon rivalry. Of course, guys. I mean, Amazon's trying to take a piece of everybody's pie. I mean, of course, they're dominating e-commerce. They got that down pat. They're getting into the healthcare side of things. Of course, they're dominating cloud. You guys know that. So now they're looking to maybe dominate Shopify. And, that could be good, a good thing overall for the market in general, as competition, under capitalism produces the best product. You guys know that. But it could end up nailing Shopify for all we know if Amazon does end up, outcompeting Shopify. So at this point, it is selling off a good chunk, like I said, after the bell, down about 8%, which is a pretty sizable sell-off for a company of the size of Shopify. I mean, they're not a crazy, massive company, but last I checked, and I forget exactly now off the top of my head, but they're in the multi-billions, right? And at one point during the bubble, right, a year or two ago, they were way higher, way bigger of a company, but still, it's come down a good amount, but they're still a pretty massive, company out there. And a 8% move, that's gonna be shedding billions off the market cap, right? So at this point, the chart does not look that great. If we look at this on the 4-hour, and mind you, it is above the 180 estimate. I guess you can argue it is holding an uptrend, so it's not as bad as other charts that we've seen, but we do have a head and shoulders clear as day on Shopify. I mean, do you guys not see it? We have the left shoulder right here. You guys probably see that. We have the head, boom. And then we have the right shoulder right here. It looks like that's slowly starting to play out, and there could be more downside on the right shoulder to get Shopify down to about 40 to 42, 43, which honestly, that's a spot where I would consider picking it up, right around 40, 42, 43, right by that 180 moving average. So in my opinion, guys, there's more work to do on the downside. Now, granted, if something crazy comes out of the earnings call, that could easily shift the direction of the stock, right? You guys know that. But if nothing crazy comes out of it, we start to get that slow drift, sell off. I don't even know what term I just used. I just made that up. I don't even know what I just said. But if it starts to sell off down to that 180 SMA, that's where I'm probably going to be pouncing, right around $43, $44. That's a big old resistance, which will probably act as support in my personal opinion. So Shopify, keep your eyes on it, guys. Now let's take a look at Roku. I've been very critical of Roku, as you guys probably know. I don't think they're the best company. They don't have the best moat out there. In fact, there's not much of a moat. So let's see how the stock is reacting to the earnings. Oh, look at that. Roku ended up actually going up 12% on the day. Massive day for Roku, and now it's up another $7 after the bell. That's actually pretty insane. Look at that. Another 12% move for Roku after the bell. Pretty impressive. And again, This is coming from somebody that's not the biggest Roku fan, and it doesn't matter if I'm the biggest fan or not the biggest fan. The stock's still going to do what it wants to do, right? This thing closed at $56 yesterday, and at one point after the bell, when the earnings came out, it hit $77. We're talking a 36% move in about a day. That is just insane, guys. That's the stock market for you in a nutshell, especially when you're dealing with individual stocks. Anything could happen. The unexpected could happen, as a lot of you guys probably already know. So Roku ended up doing, let's see here, they lost, it looks like $1.70 on the quarter in EPS, which beat the loss of $1.72, so that's good. And it looks like sales beat by a pretty big margin there. Look at that, $867 million versus $809 million estimated, so they beat EPS, beat on revenue, and it says here Roku channel reached households with estimated 100 million people. All right, 100 million people, guys. And it looks like here their outlook, Q1 outlook, reflect normal seasonality with total net revenue of roughly $700 million. I'm not sure what reflects normal season. Okay, of $700 million. Looks like here. Anything else? Roku's active accounts reached 70 million versus the visible alpha analyst consensus of 68.9 million. So that's above the estimate there. And it looks like, streaming growth, revenue beat, better than expected results. So yeah, I mean, that's what's moving the stock at the end of the day. And am I going to invest in it now because they had better than estimated results? No, guys, my opinion has not changed about Roku. Sure, could this business be around in 10, 20 years from now? Yes, it might be, but it's not one that I want to invest in. There's other places where I'd much rather put my money. But with that being said, as a short-term trade, it looks pretty decent. It's been reversing. We have a clear breakout here. We're above both moving averages. We took the highs out from a couple weeks ago, a couple months ago. We're now at a multi-month high. So this might be reversing. Maybe it has, well, it is reversing, but maybe it has more upside. And we'll see, if it cools off a little bit, lower mid 60s, maybe, we could get a trade on it, but I'm not looking to, hop into it yet. I'm just watching it, keeping an eye on it as it is ripping like crazy from yesterday. Again, it's up 37% roughly from where it closed yesterday. That's pretty insane. So let's take a look here at Cisco. Excuse me, guys. Cisco's one that is ripping here as well. You guys can see it went up 1.6% on the day, not too bad. And after the bell, it shot up about 10%. Oh my God, a lot of these companies, guys, have you noticed? I mean, the ones we talked about earlier, Roblox, what was the other one we talked about earlier? Roblox, Trade Desk, that one went up 25%. Palantir, the list goes on. A lot of these companies are crushing it, and their stocks are going ballistic. And you can see here, Cisco, although it's up about 3% now after the bell, it was up about 10% at one point, which is pretty sizable there, pretty sizable of a big move. So they ended up doing 88 cents EPS versus 85 cents, so they beat on that. And sales beat, 13.6 billion versus 13.43 billion estimated. It looks like they returned $2.8 billion to shareholders through share buybacks and dividends in the quarter, and they raised their dividend to 39 cents versus the 38 cent estimate. I guess there was an estimated dividend there, and it looks like anything on guidance, they guide for Q3 EPS of 96 to 98 cents on revenue growth of 11 to 13% year over year. That's pretty good on the estimate of 89 cents. So, and that's for EPS for the full year. So for Q3 rather, EPS guidance is a lot better than the estimate. Revenue growth 11, 13% year over year, not too bad. The estimate was, I think, 9, 10%. So that's above the estimate for guidance, which is always great. So that is a big reason as to why Cisco is tearing it up. And we can see it's now at a multi-month high, just like the other stock we just talked about, which I'm already forgetting what that was. What was it called again? What was it called? Roku. It's just like Roku. It's at a multi-month high, guys. And we can see here, if I just extend this to the right a little bit, draw it out, we're fully breaking out on this thing. The ascending triangle played out. And at this point, well, I guess we did break out initially, but now we're right back under $50. So I guess we're technically now under that resistance still. But if we could retake that $50 level, 51, maybe we start making that move back to the aftermarket high from today being almost $54. Let's see if that happens on Cisco, guys. And we also had Twilio. Let's pull that up. TWLO is the ticker. This is also up. Oh my gosh, what in the world is going on with these stocks today, guys? All of them seems like every one is just going bananas. Twilio went up 6.3% on the day, and now after the bell, it's up another 13%. I mean, this is insane. They ended up doing, let's pull the live news tab up, 22 cents in EPS, which is up from the loss of 20 cents a year ago, so that's good. Revenue came in at $1.02 billion, which beat the $1 billion estimate. And let's see here, they see full year, or that's Q1 2023 revenue of $995 million to 1.02 or 1.0, is that, or just 1 billion flat versus the 1.02 billion, so that's a little bit under the estimate. But clearly, it seems like the market does not give a crap about that, right? And they guided for, let's see, anything else on guidance? Let's see. Oh, they're doing a $1 billion share buyback program. There you go, guys. There you go. That's probably a reason, maybe one of the reasons as to why the stock is, is moving, and of course the better than expected results. So Twilio's seen a massive, massive move. I mean, you guys see it into the mid-70s right now. Let's draw out some resistance points. We have a clear one coming up at about $78. You guys see that? After that, we have a wide open gap towards the mid-high 90s. You guys see that right here. But I don't think that's going to break unless we do end up taking out, I don't want to say the mid-high 90s point won't break. We don't know, of course. But we have to deal with $75 first, $78. That's a big resistance. And I'm not too convinced yet that we're going to just rip right through that. I am not too convinced. So I'm going to set my alert at $77 here on Twilio. TWLO is the ticker. And we'll see if this earnings report and the pop that we're seeing after earnings, if it's going to sustain itself, if it's going to continue past $77. We shall see. We also had MRO report today. Let's pull this up. And by the way, guys, if you haven't gotten your free stocks yet, get up to 15 stocks from Moomoo and up to 12 stocks from Webull. It's free money. Let me know what stocks you get. Helps out the channel as well. And let's continue on to the video. And by the way, those are linked down below or pinned in the comment section. You'll read about all the details on or in through those links, which again, they're affiliate links, guys. Keep that in mind. I appreciate you all as always. So MRO, Marathon Oil Corporation. Right off the bat, we have a clear wedge on this stock. We're making higher lows, lower highs, all that good stuff, and we're digging ourselves deeper and deeper into the wedge. And if I pull the live news tab up, you guys are going to see they did Q4 EPS of 88 cents versus 84 cents, which beat, and they did revenue of $1.73 billion, not too bad. And are we seeing anything else on about guidance or anything like that? I'm not seeing anything on guidance, but it looks like revenue falls. That's what it says here. Maybe it's down. I doubt it's down year over year. Let me read this little article very quickly. Holy crap, it is. Oh, it is. Revenue came in at $1.73 billion, which last year it was $1.8 billion, and the analysts were expecting $1.73. So it came in line with the estimates, but year over year revenue for Marathon Oil is actually down. It is down, guys, by the looks of it, and the stock is taking a beating. Well, all day it took a beating. It went down 4% on the day. Now after the bell, it's down 1.5%, even more. So Marathon at this point is pretty oversold on the 4-hour chart. You guys can see it's more towards the bottom of the wedge here. Maybe we get a little bounce on it. Maybe, but the second it takes the lows out from end of December, early January, being about $25, this thing's probably going to collapse even further. So I'm going to set my alert at $25. Mark is at or below, right at the bottom of that wedge. Let's see what it ends up doing at that point. That's going to be a very important spot here on Marathon. And the last stock for today, guys, is BIIB, Biogen. Actually, is that 7 stocks? No, that's 6 stocks. We might have to do one more stock after this, guys. But Biogen went down 3.5%. I believe they reported in the morning. Let me take a look here at what they did. They ended up doing $4.05 EPS versus $3.48 that beat, and they did sales of $2.54 billion versus $2.44 billion. That beat as well, so double beat there for Biogen. They expect full year 23 adjusted EPS of $15 to $16 versus the $15.72 estimate, and mid-single digit revenue decline year over year. That's not good. I suspect that is a reason why the stocks fall, and the fact that they're seeing mid-single-digit revenue decline year over year. So we're seeing that thing dump, and this chart does not look pretty. I mean, okay, sure, it's holding trend potential, you could argue, and we're in a wedge as well. But on top of that, don't you guys see a head and shoulders? I mean, this thing, to me, is clear as day, head and shoulders. So if this falls under 270, which is holding on top of that by a thread, this could really start to get ugly. I'm not trying to, scare you guys. I'm just saying this might not be pretty if it falls under 270. So I think Kraft Heinz also reported, and we'll wrap it up after this. Kraft Heinz reported this morning, and I think Buffett still owns this. It was one of Buffett's stocks, and you guys remember what happened about a couple years ago. When was that? Time's flying, guys. I forget, but this thing collapsed a couple years ago. I think they cut the dividend or something like that. This thing went, from $90. That was in 2017. Jeez, it went all the way down to $20. Oh my God, that is awful. And now it's trying to claw its way out of there, but still, it's down big time. And you guys can see clearly we got a little wedge going on here. Also, head and shoulders action on Kraft Heinz. So the chart doesn't look that great, but they did end up reporting earnings, and the stock went up a little bit on the day. They did 85 cents EPS versus 78 cents, estimated on sales of $7.38 billion versus $7.26 billion estimated, and they see 2023 adjusted EPS of $2.67 roughly to $2.75, and full year adjusted, or rather organic net sales growth of 4 to 6%, which is not too shabby. And let's see here, anything else on guidance? Really nothing much else there on guidance. So Kraft Heinz, not the most attractive company, right? Not the most fun to track. You guys know that. But I'm still watching it here as it is at a very critical spot. I mean, let alone, not only are we in that wedge, like I said, we're trying to fight past $40. You guys, if you draw this line out here, you're going to notice 38, 39, $40. That was big resistance a couple months ago for many, many months. It is very important for the bulls to hold above here and to break out of this wedge for them to obviously stand any chance. But we're not getting that breakout yet, but I will set my alert at $40 and maybe 50 cents. Actually, let's put it at $41 and we'll see where it goes from there. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, hit that like button, make sure to subscribe, and don't forget to get all your free stocks from Moomoo, from Webull, link down below. Check out the Patreon if you guys want, and if you want a deal on Seeking Alpha Premium, all of those are down below, guys, all those links, and I appreciate you all, as always, for tuning in. And with that being said, I'll catch you guys in the next video, which I'll pop one up right here. I'll see you guys there. Peace out.